Welcome to this overview of how tax returns are processed in Denmark, and what actually happens behind the scenes from the moment your financial information is collected to the point where your final tax assessment is issued. Understanding this process is not only helpful for individual taxpayers, but also for businesses, foreign employees, and anyone operating in the Danish market who wants clarity on timing, roles, and key decisions within the system. Denmark's model is often cited as one of the most automated and data-driven in the world, built around pre-populated returns and extensive third-party reporting, which significantly reduces the administrative burden on most taxpayers while maintaining a high degree of accuracy and compliance. The process effectively starts long before you ever log on to your online tax portal. Throughout the year, Danish employers, banks, mortgage institutions, pension providers, and a range of other financial entities systematically report key financial data directly to the Danish tax agency, known as SKAT. This third-party reporting covers salary, tax withheld at source, labor market contributions, interest income and expenses, pension contributions, and in many cases, certain benefits in kind. For most employees, this means that the bulk of the relevant information is already in the system by the time the formal tax season begins. As the income year closes, SKAT consolidates these data feeds and runs a series of automated checks to match them with individual taxpayer profiles. Personal identification numbers, known as CPR numbers, create a reliable link between the reported data and each taxpayer. The system is designed to detect obvious inconsistencies, such as missing employer reports, duplicate records, or values that fall outside expected ranges based on historical patterns or legal thresholds. During this phase, most of the work is done by algorithms and rules-based engines, which dramatically speeds up processing and limits the need for manual intervention. Around March, the Danish Tax Authority makes the preliminary tax assessment available to individuals, typically via the online platform Taste Selv on SKAT.dk or the corresponding digital post systems. At this point, most people see what is effectively a pre-filled tax return, modeled as an annual statement where income, deductions, and allowances have already been calculated based on the data received. This document shows whether you are expected to receive a refund or pay additional tax. For the majority of standard wage earners with straightforward financial affairs, this pre-filled statement will be accurate enough that only a quick review is necessary. However, the system is built on the principle that taxpayers remain ultimately responsible for the correctness of their returns. If you have additional income sources, such as rental income, foreign income, self-employment, or significant investment activity that has not been fully captured through automatic reporting, you are required to update or supplement the information before the deadline, usually in early May. During this period, taxpayers can log in, correct figures, add missing information, or adjust deductions, for example for transportation, membership fees, or specific work-related expenses. Once changes are submitted, the system reprocesses the return and updates the calculated tax position. From there, SKAT processing becomes a blend of automation and risk-based review. Most tax returns are finalized purely through automated processing, with the system recalculating taxable income, applying the relevant tax rates, and offsetting withheld taxes and preliminary payments. In parallel, a targeted selection of cases is flagged for manual assessment, based on predefined risk criteria, random sampling, or specific triggers such as unusual deductions, complex foreign income, or inconsistencies between years. In these flagged cases, tax officers may request additional documentation or clarification. This does not necessarily imply wrongdoing. It is part of the broader control framework designed to maintain overall system integrity and public trust. After the review window closes and any required clarifications are processed, SKAT issues the final tax assessment notice. If the final calculation shows that too much tax has been withheld during the year, the surplus is typically refunded directly to the taxpayer's registered bank account, often within a few weeks of finalization. Conversely, if too little tax has been paid, the taxpayer receives a notice specifying the outstanding amount, payment deadlines, and any applicable interest or surcharges. The system allows for installment arrangements in some cases, which can mitigate liquidity challenges for individuals facing larger back payments. It is also important to understand how the Danish process accommodates non-standard situations. For self-employed individuals and business owners, for example, the process involves additional steps and deadlines, such as filing business income statements and potentially making preliminary tax payments based on expected income for the current year. Foreign employees working under specialized regimes, such as the expat tax scheme, are integrated into the same overarching infrastructure but with tailored rules on rates and duration. Throughout, digital tools and guidance materials are made available to support both residents and newcomers, reducing friction and helping ensure that obligations are met correctly and on time. From a governance standpoint, the Danish tax return process is underpinned by transparency, digitalization, and the expectation of mutual trust between citizens and the state. The extensive use of pre-filled returns reflects a philosophy that the tax authority should use the data it already has, rather than requiring taxpayers to re-enter information, while still insisting that individuals validate and correct the record where necessary. Data protection measures, audit trails, and clear appeal mechanisms provide additional safeguards for taxpayers who wish to challenge a decision or clarify a point of law. In practical terms, if you live or work in Denmark, the most effective way to navigate the system is to ensure that your personal details and bank information are up to date. Review your pre-filled return each year rather than assuming it is always perfect, and keep documentation that supports any non-standard deductions or income sources. In summary, tax returns in Denmark are processed through a highly automated, data-driven sequence: third-party reporting, pre-filled individual statements, taxpayer review and correction, automated calculation, and, where needed, targeted manual checks, leading to final assessment and settlement. This model significantly reduces administrative effort for most people while maintaining a robust compliance environment, and it serves as a reference point for countries seeking to modernize their own tax administration systems.